anytime a market's breaking, people are thinking, when's it going to stop breaking? Where's their bottom? Where's their bottom? Where's the low? Where's the low? Where's the low? And that's fine to think that, but you can't just execute on that because you can get run over. You got to let the market speak to you based on what the participants might be saying as to what they think. So generally, when the herd comes in and think there's going to be lower prices, that's when there's not lower prices. The herd being those opening up short positions. Also, what clues us into the low temporarily being in is a bunch of people that were long from wherever puke, get stopped out. Why? As we go over and over and over again, and that is because if you're long, it doesn't hurt to talk about this. If you're long, you are a seller to exit that long position. You hope to sell it above. If you get stopped out because the market stops you out, what happens to that order? It goes bye-bye. So when longs puke, so do their sell orders above, and it just creates less selling above, so price has an easier path up. If too many shorts get in, what is a short after they're short? They are buyers to cover that short. Too many shorts could be too many buyers and less sellers. That's not what's helpful for price to go up. It's what's necessary for price to go up. More damn buyers than sellers. Therefore, once you understand it that way, you understand why price moves, and you have to understand why price moves in order to predict what price is going to do. So take a look at this. We get what we call a super puke, which is a lot of longs getting pushed off the boat, stopped out, and then a bunch of shorts that come in. And I'll play it. And you could see this is an area that even if you don't buy it to get long yourself to look for a bounce, you could start scratching your head and predicting that the lows might be in, even if it's temporary. We're not trying to pick the low of the century. So the market's coming down. Oh, let me go back here. It's coming down, and then wham, you get a lot of longs that puke. And then wham, you get the super puke I just said. 517 contracts in this bar were sell stops. All right. And you could see it in this hollow green bar. And we go, and it's still volatile. It's back and forth, back and forth. And then what happens is interesting. A bunch of these red lines are sell icebergs, right? And when you get a bunch of big selling, after we broke quite a bit, and we came from 43 down to 25, all the selling comes in. It's generally another clue that the lows might temporarily be in. Because just think about you when you've had enough pain on a long, and you say, F it, you cover that long, and then it rallies. So like the final bit of selling comes in, and then it's able to go up. Then you see all these shorts come in, right? On the 2-minute, what we call OPP, other people's positions. And that, my friends, create the impetus of why price would find a bottom and rally. Everything else is a distraction.